Fox, finance, investment, and crypto with a twist. I'm your host, Steffy B. I'm the founder of PR company Cassiope Services, and every week I bring to you my favorite conversation with investment experts, market disruptors, mover and shakers, and the coolest project in crypto. So today I have got this question for you. Is regulation good for the crypto space? Well, this is a difficult question, but I'm joined by Matthias Bauer-Langgartner, Managing Director UK and Ireland at Bitpanda, the European crypto asset exchange with over 2.7 million customers across the globe. I'm a customer of Bitpanda. I think they are great. They have a great customer service, and also they are a European company, which is a big plus. Hi, Matthias, how are you?
Yeah, thank you very much. I'm really doing well, Steph. How are you doing?
I'm fine. I'm pretty excited to start this discussion about regulation. You are an ex-regulator, and now working at Bitpanda obviously is a move forward. But if we look back at the FCA approach to crypto, what I would like to understand is how the FCA is open to crypto and what they are doing to catch up with the fast-growing crypto space.
Yeah, exactly. Now I'm an ex-regulator. So I really enjoyed my time at the FCA, and I think they have done so many things right, because they announced the FCA Innovate initiative back in 2016, and since then have worked directly with crypto assets firms, mainly the ones who use crypto assets or blockchain technology more broadly to deliver traditional financial services. And these are extremely interesting companies, and the FCA has managed to work with them, get them authorized, and actually see how these firms interact within the regulatory framework. So they need to be compliant in order to actually provide their services. And as part of that, the FCA did have a steep learning curve. I was part of most blockchain DLT-based activities at the FCA, and the amount of knowledge that we received from founders, entrepreneurs, people in that space was just phenomenal, and helped the FCA to think about different types of crypto assets, for example, and the way they should be treated. So it helped us to understand the taxonomy, basically, trying to make sure that when we say unregulated token, everyone knows what we're talking about. Or when we say security token, this is a specific type of token, and it will have a regulatory impact.
Okay, let me stop you here. Security regulated. Explain me the difference.
Yeah, so essentially what the FCA concluded back then was that there are certain types of crypto assets that are not fulfilling the notion of a security, so to speak. So essentially they're just vouchers. They don't really associate any rights or services that the holder of the token gets. The classical example would be Bitcoin. Bitcoin is not issued on the receipt of funds, so you're not really paying someone in order to give it to you in the initial stage. If you hold the Bitcoin, you can't really go anywhere and ask for anything in return. There is no rights associated to that token. And because of that, it doesn't fulfill the notion of e-money, for example, which is a regulated product, so to speak, or issuing e-money is a regulated activity. And it doesn't amount to security either. If you think about a security, and that's when you go down the security token road, when you think about securities, you have a right to something. For example, if you buy a classical Amazon share, you have got equity in a company. You will also have rights to dividends, for example. These types of rights are not associated to the classical, completely unregulated crypto assets token, which in the UK are not regulated. So dealing with crypto assets itself, unregulated crypto assets, is not a regulated activity. Now it gets a little bit more confusing because obviously there was 5MLD, the Anti-Money Laundering Directive, and since its inception, and since it is in power, firms who buy and sell or exchange crypto assets or issue crypto assets or simply hold crypto assets for clients, they will need to register with the FCA for anti-money laundering purposes. So there is a completely new crypto assets register. But there is a difference in having a regulated activity, which is financial services regulation, and the crypto assets anti-money laundering register. So in short, if there are no rights associated to a specific token and the token holder doesn't get anything but their coin, it is most likely a so-called unregulated token, a utility token. If there are specific rights associated, you're getting closer to the security token, and that would mean that you would have to be a regulated entity to provide these services to your customers.
Obviously, issuing stablecoin, it becomes more like kind of a controversial position where, a company might have to comply with banking license, and which is, it might going to create some friction, but also some clarification in the space. Stablecoin CBDCs, because that seems to be kind of like the game and the competition. Which one do you see being implemented? And most organizations are talking about CBDCs to come soon, but it will take so long that maybe stablecoin are going to be used broadly, and then the CBDCs is not going to be able to be implemented. What's your view?
No, Steph, I think you're absolutely right. I mean, CBDCs, everyone is talking about them. I think it's going to take quite some time to see a G7 nation actually issuing one of those CBDCs. I've just recently spoken to the Bank of England, and it doesn't really look like it's, something like a CBDC would be issued, so like before the end of this decade, to be honest. So I think it's probably like the latter end of this decade before something happens, for example, here in the UK. Whether or not they are, or how the relationship between the CBDC and the stablecoin looks like, I think depends pretty much on how you design a CBDC, because there can be so many ways of designing it. You could have a CBDC that is just open to, for example, wholesale banks, and wholesale banks could use CBDCs to pay themselves, pretty much, like the old RTGS, the RTGS system that the Bank of England is offering, the real-time gross settlement system. But it could also be a CBDC that allows retail to actually gain access to central bank's balance sheet, which changes the offering massively and will actually have quite a big impact on the banking landscape as a whole, because suddenly there is a form of digital money that is not dependent on any counterparty risk. So, for example, if you go to one of the high street banks and you've got a deposit with them, they suddenly are bankrupt. Your money is protected because of the financial services compensation scheme up to a specific amount. But everything above that, that's just gone. Now, if you think about a CBDC, you get money directly from the central bank, and they can't default because they're the ones essentially printing the money. So it will change the banking landscape if you really have a CBDC that is also accessible for retail investors, or for retails. So in short, whether or not there's going to be a healthy competition between stablecoins that are privately issued from, let's say, banks, and CBDCs will depend heavily on how you design both products. But yeah, I think you can see that there is a need for stablecoins. The stablecoins out there, they're heavily used. People understand that they do have the benefits. They might also have some risk associated to them, which are new. But I think there is definitely a need for CBDCs and stablecoins, because increasingly our world will be tokenized, and even things interact with each other. Now, having so-called smart contracts, so automated payment flows, with sensors and so on, in a digital world, it just makes things so much easier if you've got interoperable systems. And stablecoins, so affecting payment, is a crucial thing that we need to tackle going forward.
Okay, I hope that you enjoyed this interview like I did. My main takeaway is that actually it's not too bad to be based in the UK, because I understand the FCA is quite open to innovation, which is great. And also, as Matthias said, regulation is actually good for the space, particularly for the longevity of those projects. And at the end of the day, we always have to mitigate the risks with the upside, with innovation, with the unknown. So it's kind of like a difficult decision, a difficult space, lots of challenge. But, you know, I think it's great to have organizations, they are actually pushing for innovation and they are looking at how to progress, how to embrace the next things. So that's very good. And yes, we need more projects to also work with the FCA and work with the regulators, because I think the real recipe to succeed is to work with regulators. That is my end of the interview. Remember that this video is only part of a longer conversation that I had with Matthias, and you can find the link to our podcast with the long conversation in the description below. Finally, if you're not subscribed to our YouTube channel and podcast, please click the subscribe button to stay up to date with our news and interviews. I will see you next time.